Most entrepreneurs focus on growing a business, but very few focus on building one worth selling. And that's truly the difference between being rich and being wealthy. So what makes a business truly worth selling? Well, one that's truly worth buying. And we say that in jest, but if you think about it, what are business buyers looking for in a company that they're going to invest their life savings in, or equity groups that have investors to answer to? What are they going to invest their money in? One is something with predictable revenue streams. Buying groups are attracted to businesses with consistent and predictable income. Why is that? Because the longer a company has been in business and the more they could see over a longer period of time how profitable the company was, the more surety they have and the more confidence and comfort level they have in going to their investors and saying, this is a company worth buying. But that also means if it's a company worth buying, that it's a company that's maybe worth more money, a higher multiple. We're going to talk a lot about multiple drivers. If your industry sells for a 5x to a 7x EBITDA multiple, what makes it a 5? What makes it a 7? So the things we talk about going to be value drivers. The next value driver are clean financials. What is the state of your financial records? Are they iffy at best? Are you trying to show as small of a profit as possible so you pay as little of tax as you possibly can? And this is a conversation I have with business owners every day. You sit there and you try to shrink that bottom line as much as you can so you could save 25, 30, 35 cents on the dollar. Okay, so you feel pretty good. Well, I didn't put $500,000 on the income statement or my tax returns, so I saved $100,000 in taxes. Well, what I would tell you is if you left off, $500,000 in net income, what you did, if your company sells for 3 times that, you've cost yourself $1.5 million. If your company sells for 5 times that, you cost yourself $2.5 million. So to save $100,000, you cost yourself millions. So clean financials are important because a buyer, especially financial groups or banking institutions, they're going to look at the cleanliness of your financials, which tells them a couple of things. One, you run a business that's worth buying. They could get with a surety that, hey, the information we're looking at is accurate, and they can depend on that when they, again, go to their investors and they're putting together an offer and they see that you have a predictable revenue stream with clean financials. They're willing to push that multiple a little further than if it wasn't, because everything they find that's wrong with the business, they take that multiple down lower, and it's hard to defend a higher price point.